Hello, folks. Brandon Chapman with you today. It's another edition of the Monday video for TheoTrade. It's February 3rd, 2025. And we're going to talk about today is redefining the bull market. Again, in light of what's been announced recently about tariffs and the like, is there a reason to kind of rethink about whether or not defining it as a bull or bear market really matters, and how does that change? So, for example, today, I asked our members during my session today about, are we in a bull market or a bear market? And overwhelmingly, everyone said bull. I don't think there was a single bear in there. And then I asked the second question. I said, well, how do you define a bull market? And many people just said, hey, higher highs and higher lows, or referencing the trend, those type of phenomenon. And ultimately, it was kind of interesting in that when we think about, those are technical analysis terms used to define whether the market is in a bullish or bearish environment. And when you think about technical analysis generally, is a bullish trend the same thing as a bull market? The answer is no, right? Certainly bullish trend is a factor, but the idea that we still look at sector rotation, we look at stuff that's leading and lagging, we look at even leading economic indicators as part of a technical analysis framework for defining bull and bear markets, because frankly, waiting for the market to decline 20%, as many people attest is a beginning of a bear market, doesn't exactly work out or bear a lot of fruit historically. And so as we think about the current market state, is it really more about risk than looking at trend? So let's take a quick look at the trend. Do we actually, in fact, have a bullish trend in the market right now? If we look at what we've currently seen, the most recent high was right here on Friday. So we're kind of seeing that kind of bearish pattern here, some follow through today. So we definitely have a short-term bearish market, because we established resistance and we're moving lower to the next point of support. Is that the low today? Is it tomorrow? Or is it anything down here? Okay. And so the idea is, again, the near-term pullback in the market. Where does this end? We don't know. We had the tariff news over the weekend. We saw a decent amount of volatility over the weekend. If you just take a look at the VIX this morning, the VIX shot up to around 20. We've kind of faded back a little bit. But if we go back to the S&P 500 again, so currently we're in a short-term bearish move, right? Bearish condition. What about the intermediate term, the sequence of highs and lows as we're looking at the daily chart? Well, here's our most recent high. That was the change from a short-term bullish trend to a short-term bearish trend. Well, where was the prior high before that? Well, we'd have to go back to January 24th. I realize these are close in succession, but again, this is the kind of volatility and two-way market that we're experiencing right now. So at this stage, we have what? We have equal highs, slightly lower highs, but I'll say equal highs. And right now, we didn't exactly close below the low of the 27th. But what we do have is a neutral intermediate term trending market. Back this out a bit further to weeklies. And you can say, but look at back here. I get it, right? You can say, okay, yes, it was down here at 35. We're at 59, 6,000. Well, when does this change? Does it change at 5,600, 5,200, 48, 44? Just keep going down. If it was just about drawing an upward sloping line, let's just go back to here and say, well, I guess if we're at 4,000, we're still in a bull market. Well, that'd be a 2,000 point correction from our highs, right? So clearly between here and here, at some point we have to define the bear. And if we're going to a bearish trend anyway, long-term trend, well, if we look at highs and lows, what do we see here? We can see the most recent weekly high, because again, at least right now, it looks like we may close below that low. Last week, we didn't take out the weekly high. So again, if we can finish down this range, it would confirm that that's a high. Well, guess what? The prior high was virtually at the same level. So what do we see? We see basically equal highs forming on the S&P. Well, that's not a bullish long-term trend, not a bearish. What we're seeing is that the market itself is starting to consolidate in the intermediate term and in the longer term. If we look at small caps, well, what about the rut here? Let's just look at the index. Again, what do we see here? Well, yeah, we had a very big breakout back here, but guess what? We pulled back and we broke through our prior highs. We put in a slightly lower low, and now guess what? We've put in a lower high. So if we're looking at small caps, we have what? Lower highs and lower lows. What about the NDX? What about the NASDAQ 100? Well, from the NASDAQ 100 perspective, we have approximately equal highs, right? We have slightly higher lows if we go back a little ways. But again, right now we're consolidating. But if we look at a key player in the space that's led the NASDAQ's charge, guess what? We have a pretty significant reversal. And now we have lower lows in NVIDIA. And so as we think about this, again, how do we define the bull market? Again, it's more than just price and trend. Well, what's maybe a better, if we're going to redefine the bull market, maybe we redefine it around risk. Well, what's the perception of risk as we look at skew? Skews come off our highs, which is crazy up here, 180. We're at about 158 yesterday. We may close higher today. We'll see what happens. We may close lower. Again, the VIX is rising. Often skew goes down as the VIX is rising. But what does this tell us? That over the last kind of year and a half, we should be what? More cautious. And what does that mean? It doesn't mean you take bearish trades, right? It just means that, look, you might have more cash. And we've talked about the notion of being hedged and having more cash since when? Well, I'm going to show you an indicator here, the 3-month to 1-month VIX ratio. We started to take this posture of taking profits, raising cash, and being hedged since December 2nd. That's when our ratio popped above 1.2 that said the 3-month VIX is 20% higher than the spot VIX. And coupled with high skew, it just says, look, we've had a nice run. We've come down here. It was more bullish at the end of October on Halloween up until December 2nd. Now's the time to take profits and hedge. Well, how did that work? If we look at the S&P, if we go back to Halloween and we go to that time frame. So Halloween is where it's right about right there. Well, there's Halloween right there. And we go back to December 2nd. During that time frame, and frankly, we were more long utilities, surprisingly, during long utilities during this little stretch right here. But the idea is what? It was a stretch where you could be more bullish. And then all of a sudden, the December 2nd, it said, look, take profits and hedge your downside. We talked about using the atomic hedge. We bought puts. We sold call verticals. We talked about rolling those puts down here around the 13th of January out to February at what? On the SPY, it was at around 560. Markets rallied. We're pulling back here. We talked about doing a VIX vol spread ahead of the pullback, which saw the VIX spike up here to above 30. We did a 20-30 spread, and then we put another 22-32 vertical long call vertical on the VIX. So what are we saying? We're just saying, look, and I had this discussion on Friday, is that right now the uncertainty is high, right? Policy is taking center stage, and nobody knows how this is going to play out, right? I think we can look long term and say, hey, if we cut costs, raise tariffs, we eliminate taxation on income, those are potentially some very positive developments. But we're talking about the short run. We're talking about the next month, 3 months, 6 months. If you want to define the market as a bull market, go ahead. It's fine to do that. But recognize that the risk right now is more elevated and the downside is pretty significant as we look at skew and the uncertainty of how things are going to play out. Well, what's one of those things? Well, if we look at gold, gold is up 0.5% today. XLE kind of overtook it towards the close here. But the idea is that, look, gold is outperforming the S&P 500. So if we look at the SPY in gold terms, we're going to see that, guess what? We're seeing that the market peaked in real terms, right? Dollar's weak. Yeah, S&P's going to go higher. Guess what? It peaked on November 13th. The current level of the ratio of S&P and gold is the same as early November, as the end of October. And if we go back all the way to April 15th, tax day, it's the same level as that point. What does this mean? If the dollar is about to reverse, if it's about to strengthen, is the S&P suddenly going to go back to April 15th levels? Or what was that? It was back here at what? 15th is right there. 50-50. That's kind of interesting. 50-50 bet. Point being is that's maybe a 20% decline off of our highs. And what is it going to take? All it takes is that the market to not gain any real value and the dollar to strengthen back to April levels. Now, if we look at DXY, does that mean, again, does this really reflect the value of the dollar? No, it's the price. And if I look at DXY, well, April was back here around 106. We're higher today. Yes, because that's the euro. This is not the dollar intrinsically. It is the euro/US dollar 57% weighting. Is it possible that the dollar might show strength vis-a-vis the euro? Yes, we're talking about tariffs on the Eurozone. They're in a much weaker position economically than we are. They're cutting rates. We're not. And by the way, the Japanese the Bank of Japan is raising rates. At the same time, the Eurozone's cutting rates. What if this begins to reverse significantly? Not just against the dollar, but even against the euro, against the yen, not the dollar yen, but euro yen. And we start to see real issues start to materialize in Europe. What does this mean for dollar demand in that case? Well, there's a lot of dollar denominated debt in Europe, and suddenly we start to see a rush for dollars. Well, in that circumstance, yes, it's going to be bearish for gold if the dollar really starts to pick up real ground, not relative ground. And that may mean a bigger correction in the S&P as the dollar strengthens and we get back in gold terms back to where we were on April 15th of last year, back when we saw gold rally back up here as the dollar's declining. Again, we could see back here. What if we get back to those levels in gold? It's possible. Again, everything comes back to risk. So the point is, we're at a very important point in the market, right? In terms of policy, making it difficult to interpret in terms of what will perform well and what will not. And so as a function, the best way to approach the market a lot of times in these circumstances is to reduce your allocation, increase your cash levels, be long if you want at this stage, but be hedged. Now, certainly with the VIX much higher today, it does make it difficult to use hedges, but look for it to circle back around. Maybe first step, given the fact that we've kind of broken out on the VIX here a little bit, first step might be just looking around and seeing where you can take profits and increase cash. If we see the market rally off the lows and the VIX comes down here to 15, re-engage again. Look at other hedging measures like the atomic hedge. And again, these are ways to reduce portfolio risk. And I talked about on Friday how it takes the edge off. Buying a VIX vol spread takes the edge off. We have a sudden pop in volatility. Who knew it was only going to be the next day? But that is what really characterizes the current bull market, and recognize that, again, we are seeing real weakness and we may have to redefine what constitutes a bear market or a bull market, in that you may want to have less exposure and more hedges as we wade through this period of uncertainty. Well, folks, wrap it up there. I'll see you back next week on the video. You have a great one. Thank you.